Vanguard Personal Investor will change their fees in August, but I've been investing in Vanguard ETFs on the platform. Should I switch to the same Vanguard Managed Fund to avoid the brokerage fee? But the managed fund normally charges higher fees. But wait, the NAV of the managed fund is a lot lower than the NAV of the ETFs. Does that mean that I'll be buying the managed fund at a bargain? Hi, my name is Irene. Welcome to my channel. In this video, I'll be comparing two pairs of same mutual funds. One is a managed fund, the other is an ETF, to see which one offers a slightly better return. If this is the information that you're looking for, you know what to do. Hit the like button and keep watching. Now, let's jump in. A little bit recap here. Vanguard Personal Investor will change their fee structure on the 18th of August. For the managed fund itself, they removed the account fee and there's no brokerage fee as usual. But for ETFs, you're going to pay a $9 per trade as the brokerage fee. If you want to know more details about the fee changes, I've got the video here that you can check it out after finish watching this one. I personally invested in two mutual funds, both in managed funds and ETFs, so 4 products on the platform, partially for experimental purposes and also curiosity. And I have to say, every time I check my portfolio, the returns of the managed fund are higher than the returns of the ETFs almost every time. And the difference between the returns generally flows from 0.1% to 0.5%. And sometimes it can go up to 2 to 3%. It doesn't make sense to me because the managed fund charges a higher management fee. Especially moving forward, I'll be paying a $9 brokerage fee. So I think it's time to run some numbers to see if I should stick with the managed fund moving forward. I have to say the results are very interesting. But before I share the results with you, let's clear some clouds here. The mutual funds that we're talking about here are all open-end funds, which means the number of units or shares can grow, so the fund can grow. Most of the mutual funds on the market are open-end funds, so are Vanguard's mutual funds. One of the benefits of being an open-end funds is that it makes sure that the unit or the share price are traded very closely to its net asset value, the NAV. On the other hand, the closed-end funds, such as actively managed LICs, listed investment companies, are traded either above or below its underlying assets NAV. Now, let's talk about the trading differences between a managed fund and an ETF. So orders to purchase or redeem units from a managed fund can only be settled at the end of the day, if not the next business day, because the fund manager has to calculate the net asset value, the NAV, at 4 p.m. after the market closes. And the unit price is very close to the actual NAV, the net asset value, although there's a slight discrepancy between the buy and sell price, the bid and ask spread, but it's really, really minor, especially the unit price is not a big number. And the actual NAV is equal either to the buy unit price or the sell unit price. Orders to buy or sell ETF units are executed throughout the trading day and market price. So the pricing changes continuously. Although the market price is very close to the net asset value, the NAV, but it generally is above or below the actual NAV due to investor sentiment, and the bid and ask spread is much bigger depending on the liquidity of the ETF. Next, I want to talk about the management fee. When I firstly saw the return of my managed fund was higher than the return of my ETF within the same mutual fund, I said to myself, I forgot to deduct the difference between the management fees. But actually that was a misunderstanding that I used to have. Well, this management fee we saw from the fund fact sheet is actually at funds level, not at investors level, which means that the total returns that we saw was already taking out the management fee. That's why that we don't see such an item as management fee shown in our statement. Last question. Well, the NAV of a managed fund is a lot lower than the NAV of an ETF. So does that mean that I'll be buying the same managed fund at a bargain? Well, speaking of NAV, the net asset value, how do we come up with this number? You use the sum total of market value of all the shares held in this portfolio, including cash, minus liability, divided by the number of units outstanding. And the NAV of a mutual fund unit is nothing but a book value of a unit. So it doesn't tell you whether a mutual fund is cheap or expensive, and the return of the mutual fund has nothing to do with it either. Let me show you a quick example. So you have $10,000 to invest. Fund X and Fund Y are identical but have different NAVs. And Fund X NAV is $10. Of course, you can buy 1,000 units. And Fund Y has NAV $50 and you can buy 200 units. After 1 year, both funds will have grown equally as their portfolios are the same. Let's assume that the funds have grown by 25%. Fund X NAV becomes $12.50 and value of your investment becomes $12,500. Fund Y's NAV becomes $62.50 and the value of your investment becomes $12,500, exactly the same as the Fund X. So the returns will be the same regardless of the different NAVs. So when we're buying a mutual fund at its NAVs, we're buying it at its book value. Since we're buying at its book value, we're paying the right price for the underlying assets, no matter it's $2 or $100. What you want to buy in is its performance, the returns. So the simple way to do that is to compare the returns during similar periods. That was a lot of concept to clear that could possibly stand in our way when I show what I found when I compare. But now I'm going to show you 2 pairs of equity managed fund and ETF. To make it simple, my numbers are based on 2,000 monthly dollar cost averaging into one mutual fund on the 15th of each month without considering any income distribution or dividend. And I can only use the historical data to get the NAV for managed fund and market price for ETF. And investor A invests into a managed fund and investor B invests into an ETF. They both invest for the last 12 months since 15th of July 2020. Let's find out their total returns after fees. And some of you may be wondering why you're making this so complicated. Why don't you just pull the returns fact sheet from the managed fund and ETF and compare? Well, if you notice for the ETF fund fact sheet that the returns of the ETF is actually calculated based on the ETF's NAV, but we know that actually the ETFs are traded at the market price. So for the first mutual funds that we're comparing, Vanguard Australian Shares Index Fund, I know a lot of us are investing in these mutual funds, either in managed fund or ETF VAS. For investor A, he's going to invest in VAN 0002AU, which has 0.16% management fee. So he will have the capital of 2,000 times 12 months of 24,000 and 1 year end value would be 26,678.20 cents. And there's no other fees. And we discussed it about the management fee that actually is taking out at the fund level, which is reflected into the NAV. So the price return for the past 12 months without the dividend is 11.16%. For investor B, who invested in VAS, which has 0.1% management fee and the capital will be the same, 24,000, and at year end, after the brokerage fee, 108, that give him the price return for the past 12 months is 10.96%. And I keep texting for another pair, the mutual fund, the Vanguard International Shares Index Fund. For investor A, who invests in VAN 0003AU, which has 0.18% management fee, and the capital will be 24,000. So the price return for the past 12 months for investor A is 11.99%. For investor B, who invests in VGS, that gives investor B the price return for the past 12 months fee is 15.52%. After testing Vanguard Australian Shares Index Fund, I expected a similar result from the International Shares Index Fund, but actually it gives me a opposite result. So it could be the VGS was more volatile, so it gave me more chances to buy a discounted share price of VGS. But again, I only tested for the last 12 months, so it could be a random number, but all we know is the unit price that we buy or sell from a managed fund is very, very close to its actual NAV. So what do we do now? Managed fund is usually very suitable for dollar cost averaging. So if you plan to do ongoing, so more frequently small contributions, and you want to buy a unit price at very close NAV unit price, and especially you want to set up an automatic investment plan, you go to the managed fund. And for ETFs, if you want to make larger and irregular investment and you want to have more hands-on control of the price that you trade, because you can set a limit order, you go to the ETF. There are 66 mutual funds that you can access through Vanguard Personal Investor. There are 23 pairs of managed fund and ETF that tracks exactly the same index, meaning there are only 5 ETFs that you cannot find a matching managed fund. If you happen to invest in any of these 5 ETFs and you're planning to continue to invest in the ETF moving forward, I've got a calculator here that can tell you your optimal investing strategy based on the value of your investment in 10 years. And I would like to give a big shout out to my new patron, Tom. Thanks, Tom. Your support motivates me to produce better content on this channel. And if you would like to join the community, I'll link my Patreon page here where I share more investment ideas and tips there. Alright, my name's Irene. I'll see you in my next video. Bye.